Hi there, and welcome to the Byline, where we discuss the strategies and technologies that are transforming business finance management. I'm Chris, and today we're talking about a department that is too often overlooked as a strategic partner: accounts payable. For decades, AP has been seen as a back office function focused on one thing: paying the bills on time. The reporting that came out of it was historical, a simple record of what had already been spent. But the role of the CFO has evolved. You're no longer just the chief accountant. You're a strategic advisor to the CEO, a driver of operational efficiency, and a steward of the company's financial future. And to do that job effectively, you can't rely on a rearview mirror. You need a forward-looking, real-time view of your company's finances. And that transformation starts with reimagining your AP reporting. So, what does a truly strategic AP reporting dashboard look like in 2025? It's not a static report you pull at the end of the month. It's a dynamic, interactive dashboard, and it's built on a foundation of a few core principles. First, the data has to be real time. I can't stress this enough. If you have to ask someone to run the numbers and wait a day for a report, you're already behind. You need an up to the minute view of your liabilities, payments, and budget adherence. It allows for proactive financial management, not reactive damage control. Second, it must be both customizable and intuitive. Every business is different, and your dashboard should reflect what matters most to you. You need the ability to filter and segment data by department, by location, by GL code, by vendor, by project. Whatever dimensions are critical to your business. And you need to be able to go from a 30,000-foot view to a single transaction in just a few clicks. Finally, a truly strategic dashboard helps you see the future, not just the past. It should use your historical data to identify trends in purchasing, highlight seasonal fluctuations, and provide the data needed for more accurate, intelligent cash flow forecasting. It moves you from simply recording history to actively predicting it. Now, having a great dashboard is one thing, but it's useless if you're not tracking the right metrics. Let's move beyond just total spend and talk about the key performance indicators that actually move the needle for the business. I like to group these into three key areas. The first area is cash flow and working capital. The number one metric here is days payable outstanding, or DPO. A dashboard that tracks DPO in real time allows you to actively manage it. Maybe this quarter you need to preserve cash, so you strategically extend your payment terms with certain vendors. Next quarter, maybe you have excess cash and want to capture discounts. That leads to the second metric in this category: early payment discount capture rate. This is pure profit you're either capturing or leaving on the table. A dashboard should alert you when a 2% discount is about to expire. Over the course of a year, managing this can have a huge impact on your bottom line. The second group of metrics is centered on efficiency and cost. How much does it cost you to run your AP department? The key metric here is cost per invoice. This is your total AP department cost, salaries, software, everything, divided by the number of invoices you process. The goal is to drive this number down through automation. Another critical one is invoice exception rate. This is the percentage of invoices that require manual intervention because of some error, like a price mismatch or a missing PO number. A high exception rate means your process is broken, and it's costing your team countless hours of unproductive work. The third, and arguably most important, group of metrics is about spend visibility and control. As a CFO, you need to know where every dollar's going. The most fundamental metric here is budget versus actual spend. But as we said before, it has to be real time. A dashboard that alerts you the moment a department is about to exceed its budget is a tool for enforcement, not just a tool for reporting. And this brings us to a concept that keeps every finance leader up at night: maverick spend. This is all the purchasing that happens outside of your approved channels, contracts, and vendors. It's when employees buy things on personal credit cards or from non-preferred suppliers at higher prices. Your dashboard absolutely must be able to help you identify this. So, how do you get this level of visibility and control? This is where we need to talk about the technology. because the type of system you use fundamentally determines the quality of the data you get. You have your traditional AP automation tools, like Bill.com or Tipalti. These tools are built around the invoice. They do a good job of automating the back end of the process. But their fatal flaw is that they are entirely reactive. They have zero visibility into a purchase until an invoice shows up. By then, the money is already gone. They can tell you that you had a lot of Maverick spend last month, but they can't do anything to prevent it next month. Then you have the giant enterprise procure-to-pay suites, like Coupa or SAP Ariba. These tools can manage the source-to-pay lifecycle, but their power comes with immense complexity and cost. Implementation can take a year or more, and they are often so rigid and difficult to use that employees hate them. And what happens when employees hate a system? They don't use it, which leads to, you guessed it, more Maverick spend. This is why a new category of platform has emerged, one that I believe is the future for any company that buys physical goods. It's a unified purchase-to-pay platform, like Order.co. The fundamental difference is where the data capture begins. It doesn't start with the invoice, it starts with the purchase request. Because every purchase is made through a centralized marketplace, the system captures 100% accurate line item data from the very beginning. Budgets are enforced before the purchase is approved, not after. Vendor contracts are automatically applied. This proactive approach completely eliminates things like invoice exceptions and Maverick spend. It means your dashboard isn't just a report. It's a real-time reflection of a controlled, compliant purchasing process. So, how do you choose? It really comes down to what you buy. If 95% of your spend is on software and services, a traditional tool might suffice. But if you have significant spend on physical goods, supplies, inventory, especially across multiple locations like in retail, healthcare, or hospitality, you have to control the purchase itself. Let's recap the key takeaways. First, demand more from your AP reporting. It should be a real-time strategic command center, not a historical artifact. Second, focus on the metrics that drive business value. Metrics around cash flow, operational efficiency, and proactive spend control. And third, understand that the technology you choose dictates the visibility you get. To gain true control, you need a system that captures data at the point of purchase, not at the point of invoice. By embracing this modern approach, you can transform your AP department from a simple back-office function into a powerful engine for financial insight and strategic advantage. Thank you for tuning in. To learn more about how to gain complete control over your company's spend, be sure to follow the byline. Join us next time as we continue to explore the future of finance.